I had not tested
all of this technology, and we're going to end up using the iPhone version like
exactly.
we did like in the pizza store.
All right. Well, ladies and gentlemen, welcome to another episode of Beer Net Radio. I'm your host, Harry Shoemaker, and we have an in-town guest, Kaumil Gajrawala with RBC Capital.
Wow, people do that all the time. No, I'm not Nick Modi from RBC Capital.
Oh my God.
Kaumil Gajrawala from Jefferies.
Okay, we're going to start.
And do not edit that out. This is going great. I'm so glad I came all the way to San Antonio for this.
So you're here for Game 5, and I hear you're a Knicks fan. You came to San Antonio as a Knicks fan?
I came to San Antonio to do a podcast with my good friend who knows me so well.
So with UBS out of Switzerland.
That was true for a long time.
Yeah.
So was Nick, though.
Yeah, that's true. Well, thank you for being here, Kaumil. It's the first one in the new studio. It's not fully set up yet, but we're going to make it work. So, Kaumil, you've been doing this for 20 plus years, and settle this for us. Just settle this, please. Everybody's asking, is this structural? Is this a secular decline, or are we just living through an ugly cycle in beer?
It's a cycle. It's absolutely a cycle. Periods like this have happened many times before. You're already seeing that we're probably towards the end of the cycle. But if you think about it, it is not strange to look back and realize that drinking, which has always been part of this major social occasion, that there was a window of time where younger people were disrupted in the normal adaptation of how they socialize and things. And it's, you're being trapped in a house during your formative social years, you are going to have very different habits.
Yeah.
And that's basically where it started. But then what magnified it is massive amounts of inflation in 2023, 2024. And that exact same demographic had the highest rates of unemployment.
Right.
And so we've done a bunch of work, Ed Mundy and I, and it was very clear. In fact, the number of people who cited affordability as the reason not to drink doubled from 2021. So you can see that increase, and you can see that it was very cyclical. But that was then. Now we think about now, people are starting to go out more. They're starting to actually they're starting to look a lot more like what you would have expected the curves of adaptation to be. And maybe that's wage growth, maybe it's unemployment is still very low. Maybe it just took some time for that adaptation, but you are starting to see it.
And maybe it took time to absorb the outrageous price increases that we took during and right after COVID.
Absolutely. And it's not just to absorb it, but many of them have, if you feel maybe betrayed by some of the brands that you knew that now are a lot more expensive than they used to be, that is partially why so much of the growth is coming from entirely new-to-world brands. Right. It's because you had these big price increases, those moves in sort of your core consumer, not the younger folks, but the core consumer. They used to just steadily buy a certain product once a week. You get a 6-pack, 12-pack, whatever it is. Now the prices are too high. It's cracked that stability, and now everything is open to them.
Interesting. I don't think I've heard people talk about that before. It broke the cycle. It opened... you gave permission to consumers to try other things, which they're doing. I mean, Super Light being, a prime example. And so
if Clement watches this, we should probably get you some new. He's in full production and distributing.
Which is funny because this is probably 6 weeks old now. It still tastes good. It holds up to age. And so, yeah. And what about you did a distributor survey? And it was kind of focused on Molson Coors. I noticed you you trimmed the price target a couple bucks. The thing that jumped out at me at your survey that I think is underreported is the amount of out of stocks that they're dealing with. How do you handicap Molson Coors?
Man, we were surprised too, because when we saw that, the first thing is how are you out of stock and down 5% in volumes? You'd think one would make the other one a little easier, but
unless there's causing the 5%. I mean,
you never. Yeah, I suppose chicken and egg. Yeah, that's a good way to think about it, I guess. Or every time there was volume weakness, which has been every year with the exception of 2 years over the last 15 years, it was met with some sort of cost saves, and those cost saves, the cumulative effect of cost savings plans and reorgs and all those types of things, lead to out of stocks even if volumes are down.
Right.
And so part of what we're saying, which is actually, I think, the general view of analysts or the general view of investors being short term and only caring about cost saves and all those sorts of things. It's not really true, because part of our call is it's probably a good idea to spend a bunch of money to fix some of those things. And actually, if you look at this portfolio, there are some executional things that money can solve. It's always money and innovation and portfolio is difficult because it may or may not work.
Right.
But when it's execution, it's more likely than not that the money's going to work. So if part of it is on the just being out of stock, spend the money on that, and don't worry so much about what we said is their medium-term guidance is probably too high. Maybe the top line's okay, but they should spend more below it to solve on some of that execution stuff. Of course, there's still portfolio and all of that, but the out of stock surprised us too. It's not something we both made.
Yeah, and they also trimmed their SKUs and brands, and it was kind of lauded as probably a good idea at the time. They cut the kind of the lower end brands, like some High Life SKUs. They cut Ice House, Keystone SKUs, Keystone Ice, whatever. They're starting to kind of bring some of that back.
Those cuts are probably okay.
Yeah.
But then take all those resources and give it to High Life. There's no reason why High Life can't be what Busch Light is today.
Right.
It's a great brand. It's authentic. It's in that price point. I think there's something sort of uniquely special about where it sits in terms of positioning.
Yeah.
It was probably under-resourced, but I do think having a very fragmented sub-premium portfolio is tricky.
Yeah.
But if you cut, I think at that time it was 4.5%, something like that of volumes, I can't remember. But if you take all of that and take all of those resources and give it to High Life, as opposed to taking it out and then just pushing those resources out.
Yeah, paying a dividend or something.
Whatever it is, yeah.
I mean,
hypothetically speaking.
Right. And it's hard because like Ice House, for example, is a huge brand in the Southeast, like in the Carolinas and stuff. But if you're in California, you don't even know what that brand is. And I still get emails from Southeastern Miller distributors complaining like, we need more Ice House Ice Light or whatever. Anyway, dumb call, but
well, beer's always been regional. And it's hard to balance when you're of a certain size. It's very, very hard to balance having scale so it's relevant to the parent co versus regional dominance.
Right.
But if your business has been struggling for any period of time, the road to improving it starts with regional dominance.
Right.
And then you can get on with some of that other stuff.
Do you think that there's a strategic play with Molson Coors being purchased, or a JV with like Heineken USA, or what do you see anything happening with them?
Probably not. It looks like the Molson family, Coors family are they'd like to continue to own this, and now you've got to give Rahul a shot.
Yeah.
He's going to make some changes. He's pushing for everything he's saying sounds like the right things.
Yeah.
And so watch that play itself out. But Heineken, I don't know if this is absolutely true, but I'm pretty sure they've been explicit to say we're not interested in Molson Coors.
Right.
I don't know if they've said that for sure and as explicitly or privately or publicly, but I'm pretty sure I've heard that many times.
No, I've heard that too, and it's just so hard for them to have scale in the U.S. when they just have Heineken, Dos Equis, anyway.
I think also larger companies would prefer to buy stuff that's growing.
Right.
And take advantage
Is that the game?
Well, there's a lot of other companies who like to look. There's other industries where they like to look and say that's an underperforming asset, and if we owned it, it would perform better.
You mean like Tilray?
Tilray would be an example of all the things that they've purchased, and they're like, we can run these things better. But then there's others that just buy what's working, and then they help scale it up.
Right.
And I don't think Heineken is looking at the Molson Coors portfolio as if we came in and took it over, we would run this in a different way that would very fundamentally inflect how it's performing now.
Right. Let's talk about AB. And, I know do you cover AB?
Ed Mundy.
Ed Mundy.
And we call it ABI. Yeah.
I know it's ABI, but I don't care about what's going on in Brazil. I mean, I do, but I want to talk about the U.S. AB. Are you as surprised as I am at the turnaround that they've been able to? I mean, they're not growing, but it's a remarkable turnaround.
Yeah, I'd say so. I mean, in 2023, it would have been very hard to predict that.
Mm-hmm.
There's a couple things that they did that I felt made a lot of sense. The first is they were honest with themselves. It's very easy when you have a moment like that to try to get back what you lost. Or you could be honest and say, we've been bleeding for a long time anyways. That just happened fast. Let's just reallocate to what we know is working, which was Bush and Ultra.
Right.
Obviously, we know the story of RTDs, but let's just reallocate to these sorts of things. And our probability of success for the overall enterprise to be doing much better is higher than trying to get back what we lost.
Right.
And that decision was the right one. Now, whether or not it was going to work was going to be very hard to predict at that time. But at that time, you sort of looked at Michelob Ultra and were like, this makes sense. This would probably work if it got twice as much money as it did. And same with Bush.
Yeah. Right. And when you go to the game tonight, you'll see Michelob Ultra on the court there in the paint. Pretty much every stadium, I think, that has a Michelob Ultra. And there'll be a lot of commercials on.
If I can see, we're pretty high up.
Yeah. Oh, really?
I hope Ultra's written in big letters.
I'm surprised you got tickets. I read this morning that they were banning out-of-state people from buying tickets, which seems so stupid. I mean,
it makes perfect sense because one of two things happen. Real fans that are local can get their tickets.
Yeah.
And everyone else can still buy them and then flip them to New Yorkers for a fortune.
Right. Win, win, win. Everybody wins.
So I think we're the beneficiaries of the second.
Yeah.
And but it's cool. We get to watch a game. This whole trip will still cost a whole lot less than trying to see the Knicks at home.
That's true. That's true. But, the Spurs are going to be, the refs are going to be against you because they want another 2 games.
Yep.
Adam Silver's, he's on the phone. You're going to see some really bad calls tonight. I'll trust you on that from your perspective. I'm going to love it. I will be with my dog in my bed. You saw that hound dog out there?
Yeah, Colonel Basco.
Colonel Basco sleeps with me every night.
That's great.
So,
at least somebody is.
Yeah, well, exactly. How much of the volume problem in beer do you genuinely attribute to GLP type drugs? Because your buddy Nick Modi attributes a high, because he takes them himself, so he's, you can see that clearly I don't take them, but I need to. But he thinks it's really significant. What is your gut?
If you look at how many million people are on it, and then you break that down for how many of them drink, and then you break down how much less they're drinking, you don't really get to a very high number.
Okay.
As big as it is for news and like all these other types of things. But yes, many people who are on it are sort of talking about, I can't drink as much as I used to. That sort of thing.
But how many?
We can talk about Nick for a minute. He has been saying that on or off of GLP on how much less he's been drinking for a long time anyways.
Right.
It could also be that at one point he was 40 and now he's 50.
Yeah, it's hard to do anecdotal. And plus...
Happy birthday, Nick, by the way.
Yeah, happy birthday.
Yeah.
And
awesome party.
How many 23-year-old guys are on GLP-1s?
Yeah.
Not many.
It's unlikely.
It's old guys like us that, anyway, I tend to agree with you. Nick, not to dwell on Nick, it is his birthday, so we will, but he also has heavy conviction that he believes that the convergence that we're seeing is going to spill over even more into the distribution tier to the point where bottlers and beer distributors will combine in the next, I think, 5 years. What is your thinking on that?
I think it'll take longer, but I think it's true.
Really?
Yeah, and if you just think about logistics operations in general, the amount of what technology is providing for logistics operators across all of things in logistics is very, very substantial. We talk about AI and what it can discover and innovation. That's all cool, but may or may not work. Mistakes will be made, but on complex systems like distribution of product where you have lots of different drop points and all these types of things is an area where AI thrives today and can make very, very substantial changes. You also have that with the combination of automation, driverless, all these other sort of pieces. How many assets do you need to deliver the same amount of volume to the same amount of locations efficiently? It's going to be less assets than you needed before.
It could be cut in half, probably easily.
Exactly. Idle trucks, there would be no idle trucks anymore. And so the idea, a lot of times the conversation about bundling comes because of volume declines. I think it's actually going to come more likely because of technology.
Interesting.
And what if the trucks, let's just pretend it's not beer and soft drinks on the same truck at the same time. But what if it was the beer truck does its deliveries and then driverless goes to the soft drinks person so it's not sitting there idle
to
do the soft drink deliveries. Same truck.
Right.
but not at the same time.
I do want to point out that electric trucks don't idle.
Yeah, yeah, that's true. Driverless and idle. Yeah, that's
Every time my 80-year-old mother, I take her to lunch, she's like, the car's not on. I'm like, Mom, it's electric. It doesn't turn on and off. You just go like it's a golf cart. And so.
And by the way, for beverages, because of the weight, electric's not really there. But if you think about where we're going,
Although Pepsi's using for long haul, not delivery.
for
but,
long haul, yeah, but a lot of it's Frito, so you're shipping.
Oh, I should, of course.
Yeah.
Chips are light and beer is heavy, ladies and gentlemen. You heard it here first. Let's talk about Constellation for a minute. They'd have a tough run. A lot of it, I think, was the ICE thing and the Hispanics hiding out. You have said that was temporary. Do you still believe that's temporary? Because we're starting to see it come back for Modelo.
We felt it was temporary. We just didn't know how long temporary would be.
Right.
Clearly, we've moved. It felt like the peak fear was Minnesota last year.
Right.
It's almost a year ago.
Really? It's been that long, yeah.
Something like that. We've moved on to Iran, right? We've got new things to sort of worry
it's one
about.
crisis after another.
Yeah, that just might be life these days. Who knows? But I do think that typical consumer, works an 8-hour shift, blue collar, hard day, goes to the bar with friends, high vis still on, 2 Modelos, 2 tacos, then leaves and goes and spends the evening with the family. Was like the biggest area fade. And I feel like they're now starting to come back and feel a little more comfortable to go out and those sorts of things. So,
but then now we have gas prices higher, and
we do. However, and we wrote a note on this, which I'll share with you at some stages. Gas prices, or the number of minutes you have to work to afford a gallon of gas, is actually not that far off from where it has been for the last couple of years, and way below where it was in 23, 24. So when you think about wage inflation,
is that because wages have gone up?
Exactly. So minutes of work in order to afford a gallon of gas. The $1 increase of gas hasn't actually had as much of an impact as one might see, which is why we're not actually seeing it in the data yet that much. There's lots of fear.
Right.
And if you want to find something, you can find certain areas of concern. And pretty much what we're finding is any company that's struggling will say it's the consumer, will say it's gas prices, but then you'll hear from Visa, MasterCard, cruise line bookers, and they're like, it seems really good.
Right. So, they're still spending, and unemployment is low, and we added more jobs. Of course, inflation was a little higher than not expected, but was higher on the print, 4%.
This most recent print was probably the first where wage inflation versus inflation started to tick negative. Mm-hmm. It's kind of the first time. So we'll see what happens from here. But anyone who was struggling before was at a time where the consumer is actually in pretty good shape. Right.
It's, you say, the amount of work to pay for gas is the same, but, tell that to a blue collar worker. They're still like, they could see the gas price and they're like, maybe I won't get 2 singles. I'll just get 1,
I think that's true. I think the rate of change is when the behavior changes the most.
Right.
And then it evens off.
Right.
And so if you do the math for Memorial Day to Labor Day, on the change in the price of gas impact on discretionary income, it's about 1%.
Right.
In general. Now, if you take that to the lower income consumer, it's closer to 3.
Right.
But still, we're not talking about sort of like 5s or 10s, as one would feel like it would have been.
Right.
And so it seems manageable so far.
It seems manageable.
But man, things can change these days.
Yeah, no kidding. Well, what other things in your distributor survey that maybe surprised you or that should be pointed out?
I think the specifics about distributors will always ask for more marketing or better marketing or whatever it is, but in this instance, they asked for more occasions-based marketing. Now, I don't know if that's World Cup related or we have so many events this year that they're like, hey, we're not doing as much as others as it relates to that.
Right.
Or it could be we're in this sort of world now where occasion-based marketing is what really drives volume. And the energy drinks guys have known it for a long time. It's why large companies have struggled with energy drinks because occasion-based is harder to scale. Mm-hmm. But it was very, very clear. It's not shocking for a distributor to come and say we want more marketing from the supplier.
Right.
That's just very expected. But to be very specific on occasions-based,
That's
thought was
interesting.
sort of new.
It's funny you say that because, I got that Boston Consulting, they did a report, it's like a 7-page report saying that occasion-based is the biggest factor in how people choose what to drink in alcohol. I almost didn't even cover it. I was like, oh, duh. Like, it was like people have been telling, the suppliers have been telling us that for years. Right. And I was like, do I report something that's so obvious? I was like, you know what? I'll just go ahead and report it. I got dozens of distributors. It just proves that I really don't know what to write about. But it is true, though.
But that's a big point, because over time, as companies are scaling and over time as they're trying to be more efficient, they're trying to figure out what to do, they're looking for highest ROI stuff.
Yeah.
And occasion-based always seems low ROI. But maybe it's because you can't calculate it.
Right.
Because you don't know exactly how that works. And it's a struggle. It's been a struggle for suppliers forever. It just feels like it's getting bigger.
Right. Well, I mean, the fact that you're here for a basketball game, that's an occasion. And we're going to go have a few beers this afternoon because if you weren't here, I probably wouldn't, well, I probably would.
Yeah, you probably would.
Well, what are we talking about? So, I know you cover Celsius and Monster as well, and maybe not as much of interest to our listeners, but let's just go ahead and go there. Is it surprising to you that they've done so well when everybody talks about how constrained everybody talks about like the K-shaped economy and how lower income people can't afford anything, and yet these expensive energy drinks seem to be doing fine.
So there's a couple of things that they're doing that I think all suppliers need to pay attention to, because I think they've lost sight of this, which was COVID was sort of a wild moment. Everybody gets a pass. Inflation was also very substantial. Everyone got a pass. But what fundamentally they seem to have fallen off on is that growth is about bringing in new users or increasing loyalty of existing users.
Right.
Like, that's it.
Right.
When you're sort of just trying to take your punches, you operate in a very different way, and there were so many things that were thrown at them that they sort of missed this new user focus. What did energy drinks do during that time? They've expanded from being about your sort of core Monster, Red Bull, extreme athlete, that sort of thing, to being more about approachable fitness, mainstream fitness. They've expanded from more males to more females. They have become more from blue collar to white collar. They've really expanded their user base.
Right.
And in fact, if you go the history of energy, it's like Red Bull vodkas, then became late night gamers, then became late night studying, then became blue collar, then it's just mixed in terms of so many different things over the last generation. And over the last 6 years, while everyone else was running around trying to cover inflation, they went for new users. More specifically on pricing, energy drink prices over the last 6 years are up 15%. I don't know how much beer is point to point, but I'm going to guess around 30. Carbonated soft drinks are 40. Coffee has doubled.
Right. They seem so expensive to me for what. But you're right. They really haven't increased prices. I think CSDs have increased prices more, right? And
CSDs is 40. They're 15.
40. Yeah. Okay. So
over that.
Yeah.
Cumulative over that period.
Right.
So you can actually look at favorability scores. And the value favorability scores of energy drinks has been growing very, very nicely. Coffee has rolled. Carbonated soft drinks kind of hanging in there. But this is not just brand favorability or marketing. This is just value. Is this thing worth what I'm getting for it? And it continues to climb for energy.
Right. Okay. And then Boston Beer. Do you think Twisted Tea is going to return to growth? Did you say that?
Did I? No, you just asked me that. I don't know.
Do you think that Twisted Tea will return to growth?
Yeah, I think it could. I mean, it had a generation of unbelievable growth, so of course it's going to slow down at this sort of volume, and a lot of people are chasing it. I don't think I don't know what you want to call it, but like the sort of new iced teas and that sort of thing, we call Northerners iced teas.
Right.
They're less sweet.
Yeah.
I'm not sure it's, we look at tea and we want to categorize everything. I just think what has happened is, things like Surfside is just an incredible brand.
Right.
And when you have incredible brands, whether it's Surfside, White Claw, Red Bull, you just have these like flag, these brands that carry the flag for a category, and then there's a bunch of others that draft off of it. For Twisted Tea, it's the flag carrier for this thing, for its own category. It's going through a little bit of a period, but I'm not quite sure that's permanent.
Okay. And you don't think
Boston Beer's going to sell to like a foreign brewer?
Yeah, they
I
will
mean,
at
people
some
have been saying
stage.
that for 10 years. I mean,
Yeah, it'll probably say for 5 more. I don't know. At some stage, I think it will.
yeah.
It's an incredibly attractive asset, not just because of its brands, not just because of the general sort of infrastructure that they've built, but also because we are going into a world where new to world brands are taking a lot of share. In order for those things to work, you need a hand-selling sales force. Mm-hmm. And Boston Beer. Go ahead, Cam.
Can I go to the bathroom?
Yeah, you can.
Oh, it's right around the corner.
But then when you come back, you have to come say hi. That's funny. I just look over and he's like,
Yeah, I gotta go.
I should have let him marinate for a while. So we're going into a world. Well, here I'll pause so it's easier to edit. As it relates to Boston Beer as an asset, I think one of the most valuable things is you have this sales force. And new to world brands are becoming more and more important in the context of the whole. I think it's 6 out of 10 or 7 out of the 10 fastest growing brands of scale are all brands that didn't exist a decade ago or barely existed.
Right.
So I think if you're a foreign entity or a domestic entity, but probably it'll be foreign, and you want to be relevant in the largest profit pool on the planet, you want that sales force.
Right.
And Salesforce is not just size and expense, it's also culture. Mm-hmm. So you give that same foreign entity an unlimited amount of capital, you can't replicate that Salesforce very well.
Right.
So that, I think, is probably the biggest asset. Of course, you've got some good brands. Brands are working. There's growth and there's loss of growth and there's breweries and infrastructure and some of those types of things. But I think if you're looking at the next couple of decades of this industry and you want to be relevant in it, in this profit pool, you want that sales force to really galvanize what things are going to look like.
And Boston's always historically been known for having not just a big sales force per barrel, but also a good sales force. You know, they train them well and they have a good culture, you know.
And they have the widest gap between their gross margins and profit margins than any other brewer by a long shot, and that's mostly because of the sales expense.
Right. Real quickly, just you mentioned AI. Are there any other applications do you think AI could affect this business, like other than logistics?
Ask me that question for any industry, and yes,
Yeah.
we probably only know about 5% of them right now. But in an industry like beverage alcohol or soft drinks, where the consumer is completely comfortable with wildly different price per ounce for exactly the same liquid, you have a lot of opportunity with what AI allows you to do from a data perspective.
Interesting.
Right? Like, so we know that the beers that we buy tonight at the Spurs game, or the Knicks game,
Right.
the beers that we buy tonight, price per ounce will be very different than this Michelob Ultra here, which I suppose is free because you just gave it to me. But if you bought this at Walmart, whatever the price was will be dramatically different.
Yeah.
And the consumer knows that. And they know that you have this really sort of wide difference. So it's always been about revenue growth management in this business. What do you charge? Where do you charge it? 12-pack, 18-pack, promo. All of these types of things can be much more carefully managed or delivered. And I think AI, what used to be just a brilliant merchant, a really good salesperson that knew the difference between buy one, get one free and 50% off and how much lift they get from promo, that's going to be more powerful than it ever was.
Interesting, yeah. The pricing element is it seems like there's a lot of opportunity there. Did you notice that Claude turned off Fable this morning?
I did it this morning. No, I didn't see it this morning.
It's
It
gone.
turned it off.
It's gone for everybody.
Really?
Yeah, I was shocked. And then I went online and they're like, the government told them to shut it off. Wow. So
I should have played with it more.
yeah, I'm like, oh man, I wish it had done more.
I did use it a bit, but no.
Yeah.
Oh my God.
That's the thing. Like, you can't put too much of your, workflow through it because you never know when they're just going to turn it off or. All right. Well, I think that. What else is that? Anything you want me to ask you?
Wait, how long have we spoken?
30 minutes.
Okay,
That's
we,
what.
we spoke for 30, and then you want to do this. How long do you like these to be? I'll bring up topics, but
No, they're 30 minutes.
okay, good.
Yeah, no, we're at a good spot.
Okay,
If we can
all right.
end it here.
Yeah.
You want to come say hi to
Actually,
your
come
dad?
say hi.
Yeah. This is a family
This is
podcast.
my son Cam. He's trying to learn what I do for a living, and so he's here watching the pod.
Yeah. And your twin sister's going to be so jealous that you guys made it on the pod. Well, thank you, Kaumil, for being on BeerNet Radio. It's the podcast where all your dreams come true. So I hope your dreams do not come true tonight.
And to be clear, I'm a Lakers fan, but this Knicks team is really special.
Yeah.
And,
No, I'll give you that. I'll give you that. All right.